Money Tuesday, have you seen the price of gold trading right now nearly at $1,900? People worried about the economy, their investments are choosing gold. But why exactly? And is it foolproof? Financial planner Stewart Welch of the Welch Group joins us here in the studio as he does every Tuesday. It's good to see you as always.
Good morning, Rick.
Okay, let's talk a little bit about this. I mean, prices have been shooting up there. Some people saying in bubble territory that it's getting a little bit too big. What's going on?
It feels frothy. You know, it's up 50%. It feels it's up 50% in the last 12 months, and, or actually, I think that might be year to date.
Yeah.
And if you look at it over 10 years, it's up 20%. So it's starting to look like a really sure deal. And I think what people lose is the perspective. So if you had bought gold last peaked in 1980 at $850 an ounce.
That's, you know, just chump change in comparison now.
Well, it is. But what happened is if you bought it then, if you bought it at the peak, 3 months later, you'd seen your investment in gold erode 43%.
Wow.
And 20 years later, gold's down to $250 an ounce. And so you went through this huge, long period of time in which it was a terrible investment. So the point is that, you know, it's not going to be a great investment forever, and it's feeling like it's pretty frothy right now.
A lot of folks say it's a whole fear factor that's kind of driving those prices up right now too. Is that fair to say?
Well, I think the gold generally is the kind of investment that when you're afraid that the world's going to collapse around you, that's where you go.
Okay, let's talk about things. You know, that's one of the things of why I'm buying gold. You say don't make it a fear purchase if you're wanting to invest there. You also say, you know, ask this question: do you think it's going to how likely is it that it goes from where it is right now doubles to maybe, say like $3,800, or goes in half by about $900?
And I think the real question is gold is getting so much hype right now that people are asking me a lot of questions. Should I be buying gold? And the question is, well, at this point, at $1,800 an ounce, actually it's closing in on $1,900 an ounce, do you think it's going to double or do you think it's going to half first?
Okay, let's jump into a few ways that you can own gold if you want to do it as an investment. First off, you say there's gold coins.
A lot of people own gold coins. That's kind of fun to own because you can actually hold them and, you know, play with them.
Yeah, a stock in a gold mining company. Now, you say there's some pluses and minuses about that,
well,
too.
Well, when you're buying a stock in a gold mining company, obviously it's a little bit like drilling for oil, right? They don't know exactly what's in the ground. And then you have, obviously, management risk. How good is management running the company?
ETF, exchange-traded funds, another option out there. The one that's kind of most common is real simple, GLD, and you say that that's one option for you as well.
So that's probably the easiest way because you can just go buy it, you know, through Schwab, through your broker, and GLD is
essentially buy it like a stock.
You're buying it like a stock, and essentially what you own is your pro rata share of gold bullion.
And finally, how much should people own if they want to make this part of their retirement, whatever?
If they want to own gold, I would generally recommend that you hold it somewhere around 5% of your total investment portfolio. There are people like Jim Cramer who thinks it ought to be as much as 20%. So I think the main thing, Rick, is to make sure that it fits in an overall strategy and that you have some kind of exit plan, have some idea of why you're holding it, and if you're ever going to get rid of it, what would be the trigger that would cause you to do that.
Stewart, it's always good to see you, pal. Thanks so
Rick.
much. More to come on Good Day Alabama. We continue Baby Week here on Good